So you've got India Bull group of companies which are looking strong. So India Bull Real Estate almost at 100 rupees, almost at 100 rupees. India Bulls Finance also giving it some company, and that also is trending up very, very smartly today. The management of Escorts joined just now to talk about the monthly dispatch numbers, and they were solid. 30% bump up is what they've reported. Bharat Madan joined just now, Group CFO, to take, let's take the conversation forward. Mr. Madan, good morning. Thank you for joining us. It's just getting better and better. The base effect, even though it has kicked in, on a high base effect also, the sales for the tractor industry are at 30%. What kind of visibility can you share with us for next 2-3 months?
Well, I think the base effect is still to set in, so I think we'll start seeing the impact coming in from next month onwards, because March is the month where the first actually the music correction happened because the lockdown started. So I think the next 3-4 months are going to be quite strong. I would say I think the growth will be tremendous. I think in the next 3-4 months.
Have the supply issue normalized, or are these numbers only looking strong because of supply challenges?
So supply has been normalized because I think the major demand which is there in the peak of festive season, obviously that had its own concern. But now, as you see, the demand is quite strong, so that will have its own issue in the supply capacity, etc. So even though in the normal case, I would say the supply challenges have been there, but I think the way the demand has been there, that will market now, and that definitely will deplete the inventory levels again with the channel and the company as we go forward in the next few months.
Okay. The tractor sales, a nice positive surprise there, Mr. Madan. Just run us through some of the factors. Is the growth there sustainable given the kind of Rabi season that we've also seen? It's been particularly strong this time.
Yeah, it looks like I said, I think next few months definitely it looks like the growth momentum will be there. At least we are very bullish, at least till the period till June, because there is already the base effect will be there, and you see very strong traction on the ground. The Rabi harvesting now, which will start now, that will again be expected to be really quite strong, and you're seeing that bit coming in from January to February, and the season doing extremely well. I think as you go into the season months, which is March and April, you see the momentum will still continue to build up. So overall, I think the rural cash flow has been quite strong. All factors for the rural economy look like positive as of now. So we don't really see a concern, at least in the next few months. Definitely, I think beyond June, it will depend again on how the monsoon prediction is and how it pans out. But otherwise, the initial indication as of now look positive for a normal monsoon. So let's hope we are keeping our fingers crossed and hope the next year again it should be a record year for the industry.
Great. If we were to look at price hikes as well, how many have been done, whether or not more are in the offing, any indication you can give us on that as well, the kind of price hikes that you might be looking to undertake going forward?
So we had taken one price hike in the last quarter, which was Q3 after the festive season. So that took care of the inflation pressure which is there on the commodity side till December. But definitely we normally have a policy of passing it on the lag of the quarter. So the current quarter inflation, which is again continuing as a concern, so that price hike really will happen sometime in the next quarter. So we look at that passing on those price increases. So definitely this quarter will have some impact because of that on the margin front, which will remain under pressure slightly. But since the operating level is going to be good and the demand is good, so hopefully some of it will get offset with the benefit from that. But yes, for next quarter, we expect the industry will pass on the price increase to the market.
Okay. In the last result call, you talked about the export order book as well and how that was looking good, but how you'd been unable to meet demand because of capacity constraints. What's the status on that now?
So I think that same pressure continues here now. So we have good order book for exports. So, but as you see the numbers, I think we are not doing almost 500 tractors a month sort of numbers. Against 200 odd numbers used to be 2-3 years ago. So definitely there's been a good uptick which is happening now. So as the issues in the supplies are getting sorted out, the capacity issues will get sorted out. So export definitely will get a priority from our side too. So we expect on the capacity front also, company has been working and trying to improve capacity both at its own and as well as the suppliers end. And that also should get addressed before the next festive season starts, so by August, September. So next year we don't see should be an issue on the supply side and the capacity side front, to take care of all domestic demand as well as exports. But right now we have some tendency on the export, but gradually now we're producing enough to continue push on export too.
Are you in a position to keep on increasing price hikes? Because that's inevitable. The price of steel, rubber, raw materials are increasing. Do you think you will be able to maintain both upward pricing power and these kind of numbers, I mean, in terms of dispatch numbers?
So definitely that is one concern which I think most of the players in the industry had, and that's why you did not see a sharp increase happening in this quarter, in spite of the fact that the commodity price have continued to move up. So that remains a concern. So definitely after this festive season is over, so maybe from April, so the industry will look at the possibility of increasing the prices. And hopefully, I think that should happen in the next quarter. So definitely we'll be watching the industry and keeping up with the cost. But normally, if you look at the past trends, normally the industry has passed on those sort of cost increases. So it's only maybe a matter of few months here and there from various players. But generally, we've seen the tendency is to pass it on. So we definitely expect you see it happening in the auto industry, where similar cost is happening. So I don't think anybody will be able to absorb those sort of cost input on its own P&L. So gradually it will get passed on.
Looking at the current demand supply situation, would you be looking at increasing and investing in your capacity expansion? Because if you're confident for 18 to 24 months, does it make sense to increase capacity? Would you commit capital there?
So we already indicated we already ramping up capacity both at our end as well as the supplier end. So we already I think indicated we are doing almost 100% now in capacity expansion. And that should take us to a level of 180 to 190,000 capacity by August to September of this year. So that includes the capacity addition which will happen from our JV with Kubota. So we will get additional 30,000 tractors capacity. And our own capacity is likely to increase from 120,000 a year to about 150,000 a year. So these two combined should be able to address the demand momentum what you're looking at for the next 2 years.
Okay, Mr. Madan, great to have you on the show. We'll let you go on that note. Thanks for joining in. Let's just quickly revisit what the market is up to and the gains, of course, from